the giant cup and handle that I identified, I don't know, it was a year or more ago now, a couple years ago, we were making a cup and handle here, and we did it in gold, and I was tracking that, and everybody was all excited. But nobody, it was a while before I took a look at a 50-year chart, and I went, oh my God, we are developing the handle of a cup and handle formation that has been developing over the past 45 years. And this is suggesting silver in triple digits. And I believe that's where we're going.
Silver is making headlines across global markets as it surges to its highest levels in nearly 14 years, while also setting fresh records on long-term charts. According to Mike Maloney, this moment marks far more than a technical rally. It represents the return of silver to the monetary stage after decades of being overlooked. Central banks, which have traditionally held their reserves in gold, are now signaling a shift in direction. Russia began purchasing silver last year, and Saudi Arabia's central bank has followed suit, underscoring a significant shift in policy. Maloney stresses that monetary demand, rather than industrial use alone, is the catalyst that has the power to drive silver into triple-digit territory, and the current trajectory suggests that this shift is already underway. Market conditions are offering further confirmation of this transition. Silver briefly enters backwardation, with spot prices trading higher than futures contracts, reflecting intense near-term demand for physical supply, a rare phenomenon that carries weight in commodity markets. In parallel, the U.S. Department of the Interior has, for the first time, designated silver as a critical mineral on its draft 2025 list, elevating it to a position of national and economic importance. The structural challenge lies in the fact that most silver is extracted as a byproduct of the extraction of other metals, such as copper, lead, and zinc. Any slowdown in these sectors inevitably reduces silver output, just as demand accelerates from both industrial applications and monetary recognition. Maloney explains that this supply and demand squeeze is the exact scenario that has long been anticipated and is now materializing in real time. The valuation story provides further insight into silver's potential. The estimated worth of all silver mined throughout history stands near $2.1 trillion, an amount smaller than the market capitalization of a single company like Amazon. Yet silver is a critical material for renewable energy, advanced electronics, and industrial systems, as well as an emerging monetary reserve. Maloney points to decisive technical signals, including confirmed breakouts on quarterly and annual charts, as well as the formation of a rare decades-long cup-and-handle pattern, which collectively reinforce the argument for a major revaluation. These factors establish silver as one of the most strategically significant assets of the current era, with its path toward much higher prices becoming increasingly clear. Now, we present the clips from Mike Maloney's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Silver just set a high that is a high for the last 13 years, 11 months, and 10 days, but by a couple of other measures, it has set record highs, and I'm talking the last 2,500-year all-time highs. So I'm going to show you that later. But I have always said that it's going to be monetary demand that drives silver to the moon. And we are destined for triple-digit silver, and it's probably mid-triple digits. And that demand looks like it's happening right now. Central banks appear to be remonetizing silver. So let's get into it. First, make gold great again. Big breaking. Saudi central bank buys silver. For half a century, central banks only held gold. Russia broke that trend last year with silver purchases. Few believed, but here it is. Silver is being remonetized. Moving on. On the same day, Hansa Czerny recognized that silver spot above futures is a warning signal. Now, normally we're in something called contango, where people pay a premium for delivery of silver out in the future. When silver today goes above the price of the silver futures contracts, that's backwardation. And that is a rare and important signal. The spot price briefly traded at $39.31, while the September 2025 futures contracts stood lower at $38.99. So this is a very important warning signal, and here's what that looked like on those silver futures. Moving on, Hansa Czerny again, draft status. Silver has been added for the first time to the 2025 U.S. draft list of critical minerals. And Bob Coleman says the Department of the Interior released draft 2025 list of critical minerals. Guess who's on it? And he published the list here. And yes, if you scroll down, you will see that silver, and this column says, yes, it's a byproduct of mining other metals, zinc, lead, copper, and gold. What happens if there's an economic slowdown or some sort of crisis globally? They slow down all the usage. You don't make as many car batteries. You don't make as much things with lead, and you use a lot less copper to build homes and wiring and all of that. This is where most of the silver comes from. And so just as everybody wants it, just as I predicted in my first book, released back in 2008, and I reiterated in my last book, released in 2023, that there's going to come a day where everybody wants silver, but nobody is going to be using all of these byproducts, so the supply goes away just as the demand is increasing. Moving on, Make Gold Great finally is officially listed critical mineral on draft 2025 Department of the Interior. Can I now suggest where it fits on their table? And this is great. We've got importance to energy, and we've got supply risk, and silver. Out of all of these different minerals that are listed as important or supply risk, silver is actually the most important one. So Make Gold Great is absolutely spot on with that assessment. And then I want to point out how small the silver market is right now. This is insane. So we've got one Amazon at $2.3 trillion, the value of the company, versus all the silver ever mined throughout history at $2.1 trillion, valued less than just Amazon. Now, we now, with central bank buying, and with companies like Tesla and all of the solar companies and everybody who needs silver starting to realize that they need to lock in these lower prices. Every time silver goes down, there's going to be a big buyer coming in. Silver, I believe, now has a floor under it. This is really, really big, and it's really important. When it comes to silver deliveries, these are the contracts that are being delivered. Each one is 5,000 ounces, I believe. So the number of contracts. This is what things normally looked like. And then we had the COVID period where there were a lot of contracts being delivered. And I want to see what this looks like next month, because we're going to be seeing an enormous spike here, I believe. And I think that's just going to continue and continue and continue for quite some time. So as far as the commodities exchange goes, we already know that they run a very lean operation with basically fractional reserve. So all of the silver that has been, I was tracking this earlier in the year, all of the silver and gold flows around the world. Suddenly, this is coming back to haunt them again. There's going to be more withdrawals than there is supply coming in, and when you're running a fractional reserve scheme, you can get buried. So sorry, we've experienced force majeure. Here's some fiat instead. So what happened? Let's take a look at some of the charts here. Silver reached an intraday high, just 3 pennies below $40 today. This is Friday night, August 29th, you can hear all of the little coqui frogs in the background here. I've been assembling this ever since silver hit its high. I've been assembling this video to go together, so that all of these tabs. But what you can see here, the close was 39.74. The intraday high was 39.97. And so this is a look at the entire bull market of this century. And so now we just have this little area to surpass as far as fundamental, as far as technical resistance. This really isn't fundamental resistance because there is so little trading that went on there. Anybody that did buy and is still holding isn't going to let go of their silver. They're not sellers.
Mike Maloney underscores that gold's surge past $3,500 reflects more than market enthusiasm. It signals deep fractures in the global financial system. He points to the erosion of trust in fiat currencies, where relentless money creation and rising debt burdens have left investors searching for stability beyond paper assets. In this environment, gold asserts its role as a neutral reserve asset, free from political manipulation and counterparty risk. With U.S. debt levels exceeding $33 trillion and confidence in central bank policies waning, Maloney views the rally not as a temporary spike, but as a fundamental revaluation of money itself. At this moment, he argues, gold is not simply reacting to inflation, but is actively exposing the vulnerabilities of a debt-driven system. Turning to silver, Maloney highlights its position as both a financial and industrial powerhouse poised for reappraisal. The current gold-to-silver ratio is approximately 87-1, significantly above historical norms, indicating that silver is undervalued and due for a sharp rebalancing. He stresses that silver's role extends well beyond its monetary appeal. Its demand in solar energy, electronics, and medical technologies continues to accelerate as global economies shift toward renewable and high-tech infrastructures. This combination of industrial necessity and historic undervaluation forms what Maloney describes as a rare setup for outsized gains. If market dynamics shift in line with past cycles, silver could not only narrow the gap with gold, but outperform it decisively, marking the next phase of the precious metals bull market.
Let's take a look. This is something very interesting. So this 24, 25, so this is a quarterly chart, and what you see here is we just did a breakout on the close. We are above any of the closes back in 2011. Very interesting. I'm going to show you this in a couple of different formats so that you really get what is going on here, because this is huge. It really is huge. I first started buying silver in April of 23. April of 23. So I'm going to go back to that long-term chart. I'm talking about down here below $5. I believe it was $4.30 when I first started buying silver. So I have been waiting for, 22 years. That's why I'm so excited about all of these developments that are happening right now. So if we go to an annual chart, we've done another breakout. This is the close. And this is just intra-year trading during 2011. And so we have done another breakout, but I'm going to go deeper on that. These are candlesticks. If I go to just a solid line, that data is based on the close only, so you don't get the noise. Okay, so these are candlesticks again, but today we equaled not the close, but the open of 1980. This is 1979. Each one of these is a fiscal year going back from, this is August 29th. So this is August 29th of last year is the close of this year, and so on and so forth. So they're fiscal years. So this high here, this is 1980, but this is the close way down here at $12.50. This is the hollow body candles are up candles where the open is at the bottom and the close is at the top. The solid candles, the open is at the top and the close is at the bottom. You can see the giant cup and handle that I identified, I don't know, it was a year or more ago now, a couple years ago. We were making a cup and handle here, and we did it in gold, and I was tracking that, and everybody was all excited. But nobody, it was a while before I took a look at a 50-year chart, and I went, oh my God, we are developing the handle of a cup and handle formation that has been developing over the past 45 years. And this is suggesting silver in triple digits. And I believe that's where we're going. Now, when you do the solid line, this data is based on the close. So this is monthly data, and we've done a breakout. We are now at the highest close in history monthly. If we go to annual data, a huge breakout annually. We are now at the highest close on both the other one wasn't monthly, it was quarterly. I'm sorry. Quarterly, highest close in the last 2,500 years. Monthly, highest close in the last 2,500 years. And you can see this giant cup and handle. However, in a video that Alan and I did a few weeks ago, Jason McNatt says, that's not a cup and handle, it's a beer stein. And I am going to celebrate when silver breaks that, on a closing basis on stock charts, it says that $49.45 was the high. The intraday high on the Chicago Mercantile Exchange was $52.50. And so once this thing passes $50, and it will, and it's probably going to do it soon, then it's time to kick back and have a beer, because I've been waiting 22 years for this.
Not only gold enthusiasts, but also silver investors have strong reasons to remain optimistic as markets head into the winter season, a period that has historically favored precious metals. Recent chart patterns suggest that the correction of the past few months may have formed a solid base for the next significant upward move. On the fundamental side, the weakening confidence in the US dollar, exacerbated by political unpredictability and the looming refinancing of America's $37 trillion debt, highlights the structural cracks in the global financial system, while France's mounting debt troubles add to the growing unease. With expectations of a Fed rate cut on the horizon, pressure will likely mount on fiat currencies, making tangible assets more attractive. Unlike a decade ago, when low interest rates fueled stock rallies, investors today are far more cautious, recognizing that soaring debts, paired with easy money policies, point to instability rather than prosperity. In such an environment, the appeal of gold and silver stands out, not just as hedges, but as proven safe havens that have endured every financial storm in history, offering protection against both inflationary and deflationary shocks, making them increasingly indispensable in the uncertain months ahead. Do you think gold and silver prices are just getting started, or have they already reached their peak? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.